Hello, EB-5 investors and industry friends. The third quarter 2023 just concluded, and we are now about 18 months into the new 2022 EB-5 Reform and Integrity Act. The team at Behring Regional Center hosted a live webinar to discuss the hottest updates, and there are some big ones. Key topics covered in this presentation include the USCIS announcement of a new policy offering 5-year EAD cards, changes to the 2-year sustainment period, as well as how a 2-year project investment may or may not work, as well as a final look into what EB-5 opportunities are available, and then a Q&A session at the end with Nima Korpivaara, a partner and top immigration attorney at KLD. So we put really useful information in the description where we provided a list of chapters and topics, as well as links to presentations, handouts, and other resources that are mentioned throughout the video. But if you have any real questions about EB-5, it's always best to just make an appointment, talk with our team at Behring, and then that's going to give you instant access to one of the top EB-5 teams in the country. You get to talk to award-winning developers, immigration attorneys, and even a former USCIS adjudicator. That's the best way to get your questions answered. This video is educational. It's not constituting as investment advice, so always consult your own hired professional first. Now, enjoy the presentation.
Hello, everybody. I'm Peter Bibler. I'm with Colin Behring. We're having to jump on here in just a moment. Thank you for being here today. We are here to talk about some big news on some recent policy updates from USCIS. There actually has been a lot and several different policy changes in different times. I don't know if we'll cover all of them, but we're going to cover the most salient topics today, which is mainly the changes in validity dates for EADs, the employment authorization documents, and the minimum sustainment period for investment, and how is this being defined, and what impact that has on pre-RIA investors, post-RIA investors, and the practical realities of what this means in terms of investments and in terms of projects.
Originally, guys, we were going to be having multiple topics about, talking about future markets in the next 5 years and things that are going on economically, then USCIS updates and things like that. Then we got this big news about the sustainment period that Peter is mentioning. And now I think for the vast majority of today's time, we're going to be spending all of that effort really actually answering those questions and talking about that topic and the fury of conversations and everything that have been taking place across the industry, investors, regional centers, banks, offerings, developers, everybody in the middle. Everyone is talking about what does this mean? This is an interactive event. The webinar is going to have polls and questions. We really want you guys to give your input. It'll help us shape the Q&A. It'll also shape future content, future webinars, and the fact that we have so many people interested here today, and we had almost 400 people sign up for today, and the replays are going to go out. So, please participate in those polls, and also in the Q&A session. We're going to blast through this information and go pretty quick in order to get to that Q&A session, because it's typically the most valuable and the most interesting of our webinars. So that being the case, Peter, why don't you take us through the USCIS updates?
Yes, certainly. So, like I said, there were several updates that have been coming over the past several weeks from USCIS, and we expect a lot more. Just as a context, we had the Reform and Integrity Act that was passed by Congress last year, March 15, 2022. And that set off major changes throughout the EB-5 program. And the next step for USCIS was to publish new forms, which they've done, and they've actually done twice, going through notice and comment periods. And then secondly, what they need to do and have yet to do is to propose new rules and publish these final rules into the Federal Register as new regulations after a sufficient period of notice and comment by the public. There's several, and this is normal. This is when after Congress passes a law, they tend to just kind of punt the heavy and the dirty work to the agency, and the agency is then left to go through this rulemaking process to flesh out the details and address the unanswered questions or issues that come from that statute. There are several points in that statute where USCIS needs to do that. Part of that was the sustainment period, and we'll get to that in a moment. Most recently, the good news on policy front is the EAD. So USCIS on September 27th issued an announcement saying, look, we are extending the 5-year or extending the validity period from 1 year to 2 year EADs to 5 years for any EADs and applications that are pending as of September 27th and or filed thereafter. This is great news. Obviously, EADs, this employment authorization document allows you to work wherever you wish, however you wish in terms of opening up your own business. It doesn't require an employer sponsor. So it gives you a little bit of freedom, like having the benefit of a full-fledged green card while you're waiting for that green card to come through. The benefit of having a 5-year extension, I think, is obvious. There's no need for renewals, waiting for renewals, dealing with employers and your own marketability when taking on jobs in that process. The advanced parole, which is the travel document, the visa-free travel document, that's still for 1-year periods. We have heard, whispers of people getting a 5-year advanced parole, but that was probably a fluke. Time periods for these EADs, for our investors anyway at Behring Regional Center, we are seeing that typically within the 3 to 4 month range. I have seen a couple in the 5-month range or so, but most of them have been in the 3 to 4 month range for people who've started filing their EAD applications after people started around August of 2022. The advanced parole tends to take a little bit longer. Historically, I think one of our first post-RIA investors, it took about 8 months. I have seen that as come as fast as 3-4 months, and so hopefully we're seeing some improvement on that. But people should make plans and be aware of that need that sometimes the advanced parole takes a little bit longer. One key point I just wanted to highlight is, the visa numbers reset on the start of the fiscal year, and we saw that in the October visa bulletin. And there wasn't a substantial change in the EB-5 front, but what was important is that the Table B, which is the dates for filing, and that jumped back to April 1st, 2022 for Indian nationals and January 1st, 2017 for Chinese nationals. And this is important because if your priority dates are before those dates, you then are able to file as of the October visa bulletin and the November visa bulletin, file your adjustment status applications. And this can do a couple things that are important. One, it enables pre-RIA investors who've already filed their I-526 petition to now get their EADs and take advantage of this concurrent filing option that new investors have been enjoying. And secondly, USCIS on their website has indicated that at least for these past couple months, you can use Chart B to file your 485 adjustment of status, and that helps you lock in a child's age for to prevent the potential child age out for some families. I've even had investors speak with investors who, because of those changing dates, no longer need to make a second investment out of fear of a child aging out, and that's great news for that family. So I encourage everyone who's in these windows or looking at EB-5 to talk and consult with your immigration attorneys about this process. All right. The heart of the matter, though, is the sustainment period. So just recently, USCIS issued what they did was they updated their Q&A section in their EB-5 website at uscis.gov, and we can put a link to that website in the chat, where they have an updated Q&A. And it covered a lot of things, but most pertinently to EB-5 investors, the USCIS recognized issues with retrogression, issues with visa processing times, and we can talk about that later, that the RIA, the Reform and Integrity Act that was passed last year, likely has changed what it means for your sustainment period, meaning how long must your investment be sustained in a qualifying EB-5 project before it may be repaid to you while still being eligible for your permanent green card. And so we'll talk about that today. Suffice to say, in short, it says that the sustainment period is a minimum of 2 years after the investment is made available to the job creating entity. So for folks that might not be as familiar, whenever you do EB-5 through a regional center program, whether it's with Behring Regional Center or another regional center, typically what you're doing is you are a limited partner and you are investing in what's called a new commercial enterprise, or NCE for short. And this is typically a limited partnership or a limited liability company, but basically it's a fund. And that fund pools the EB-5 capital and invests it in the project, which is the project that's creating the jobs. And that's called the job creating entity, or JCE. Rarely is it combined. And so USCIS makes clear in this Q&A, this guidance, that the sustainment period under the RIA is a minimum of 2 years after the investment is made available to the job creating entity. Now, there's a couple qualifiers to this. Your investment must be, some people start their investment early. Like if they're on E2 and they had money in their business, their own business, and they're converting to EB-5, you still should have your funds invested at the time that you file your I-526 petition. And you still need to satisfy the job creation requirement. And so that may take longer than 2 years to do so. We'll talk about some of these issues or unanswered questions that this new guidance raises here in momentarily. But one thing that this does solve for people is the issue of redeployment. So historically, because of extended processing times, or in some cases for investors from China, India, Vietnam, where there were visa backlogs, the time period just kept getting deferred and deferred before they completed their 2-year sustainment period for investment. And during that time, it wasn't unusual for projects to be completed, their initial project to be completed, and USCIS would not allow you to put those funds into a mutual fund, into a stock account, or into an escrow account. They had to be reinvested into a project. And so this 2-year sustainment period, this redefinition, has the potential to avoid those issues for EB-5 investors and kind of reduce that anxiety, because you already take the time and the due diligence to invest in one project. Obviously, it creates a little bit more of uncertainty for folks if you realize that a few years later, 5 years later, you have to be reinvested in another project that's new to you. So the redefinition of the sustainment period has the potential to solve that in most cases. Now, stepping back a bit, the Q&A that's published on USCIS raises some potential issues, and this is not unusual. Historically, the practice was you could not have your funds returned to you until your I-829 petition was approved, and that meant that your investment could be invested for several years, even beyond your initial project. There was draft guidance in 2015. They never made a formalized guidance, but then they later updated the policy manual. So we've seen these types of announcements before that kind of have rough starts or concerns about misinterpretation or just confusion. And where we are now is that while we have this new guidance, there is an existing federal regulation that still defines the sustainment period as the completion of your conditional residence period, meaning the completion or the time you've had your conditional green card for 2 years. That regulation is still there. We haven't seen a notice of proposed rulemaking by USCIS, and I think that's the next step. Because when it comes down to like black letter law, right, you have the statute, you have regulations, you have in case law, you have agency guidance. And the potential here is that if there is litigation in the future and we don't have a new rule, there's always the potential for the court to look at this regulation and say, no, this is the law, right? They can look at the Q&A, the USCIS guidance as persuasive authority and interpretation. But if it's contradicting something clearly in a existing law, that's going to create a potential issue. So I expect here soon we'll see a notice of formal or proposed rulemaking, which to create a new regulation with respect to the sustainment period. But that's going to take some time.
Yeah, and also, like, just to add here, for everybody that's a little bit new to Behring and new to our materials and all those kind of things, we are very, very well, very well versed in the courts. We've sued USCIS 3 times, Department of Homeland Security. We've been in lawsuits before, and that ranking that Peter is talking about is extremely important. So you're talking about statute laws that come from Congress. Then you've got the agency regulations that are passed through rulemaking. That goes second. Then you're talking about the other categories and the other guidelines and case law and other things that come there down low. But the other ones are extremely important to know the ranking of how important each one is. So if they conflict, if there is conflicting language that says one thing is A and then the other thing is B, the court is going to look at those rankings first. So it's very important. We're going to talk about that more in the Q&A session after we get to it. But understanding the priority of respect from statute to rulemaking to USCIS practice and case law and everything else, that ranking is very important. Go ahead, Peter.
Yeah. And, a couple other things to be mindful of is in terms of potential issues, and the USCIS Q&A recognizes this in its own on the website, is that you still need to be invested to create the jobs, and you still need to be invested to make sure that job creation is completed, and but the issue is, when does that 2-year period start? And we'll talk about that with respect to the projects. And there's a recognition that possibly the 2 years will start for all practical purposes, from 2 years from project completion, so that that the jobs are done. That the funds the EB-5 capital has been deployed to the project and to spend on construction costs or to replace qualified bridge financing. But those funds need to come in and be used in the project. And you'll see that in reality, those funds usually come over a period of time. And EB-5 capital is fungible. It's not necessarily investor goes in on one date and it's 2 years from that time. These are loan. We'll go into more detail here shortly, but these are dispersed to the project, and USCIS is recognizing that each project may be different in that regard. So that's why we'll need to see more guidance from USCIS, preferably in the form of a federal rule that they'll publish. It'll give 60 to 90 days of comment period for the public including you, potential investors and existing investors, lawyers, regional centers, developers, all to make comments on, and then to finalize a formal rule. One thing, this is very exciting. It's also pretty confusing, and it's a time to step back and be mindful of certain things to watch out for. One would be aggressive marketing. This is going to be a ripe time for regional centers projects to claim that they're going to repay you in 2 years or 2.5 or 3 years. And it's just, you should look at the fine print, and we'll talk about the realities of projects and different types of projects. But the devils are in the details, and that's why whenever you're looking at projects, ours or anybody else's, you're going to look at the private placement memorandum. You're going to look at the limited partnership agreement, and that's going to have those details about the project and about the repayment period and so forth. Construction timelines. It's important to know that the Reform and Integrity Act made a distinction between project timelines. If the projects are 2 years or more, the project inherently creates more jobs through the economic models that it's using. The dollars spent have a larger scalability when the timelines are beyond 2 years. Secondly, if it's less than 2 years, the Reform and Integrity Act, it places a higher burden on the project to create direct jobs. So the difference is specifically 2 years or more, you need 10% direct jobs. 2 years or fewer, you need 25% direct jobs. And so those are two issues. One would be the actual scalability of the number of jobs to be available for investors. And secondly, the number of making sure that the project can sufficiently create the requisite number of direct jobs. You can't avoid, the issue of just weaker project underwriting, and we'll talk about this here in detail shortly. But you need still choose projects that have a clear path to liquidity. What is the exit strategy? It doesn't. The marketing could say a project is 2 + 1, but if the exit strategy is relying on the sale of luxury condos in an 8% mortgage rate environment, it's unlikely that obviously it depends on the number of condos in that project, but it's unlikely that you would be able to sell with all those condos in a period of time. So these are just kind of project realities to be mindful of during your due diligence. But I want to use this point too to kind of talk about our track record in these circumstances, in these types of environments. When the policy's unclear and there's more changes coming ahead, we have a proven track record to do the right thing for our investors. As early as 2016, the I-526 form, the regulations have always said that you could file and show that you are actively in the process of investing, meaning that you could actually file your petitions and get your investment started with less than the required minimum investment capital. This needs to be done carefully and properly, but we've had a 100% track record since 2016 doing this. But many at the time, and for several years, said you could not do this. And I think it was, Colin, when was this, 2019, when during a public call with USCIS, where Colin asked the IPO chief point blank on public record, is this permissible? And the answer was yes. There's a recording out there somewhere on the USCIS website that you can access to see that.
Yeah, we have it as well. And, again, it was another case that we all need to probably take as a lesson, because ultimately there was a lot of fear mongering over the idea of new policy, the idea that something was not possible, something, USCIS hasn't approved this, they haven't talked about it, they're not giving guidance, or it's not clear. So many people were trying to challenge us at that time. This was 2017. It was very early And there was an engagement call with USCIS, and we just asked them point blank, can you invest in stages over time and be in the process of investing in USCIS? Clearly clarified it. That was very early. So partial capital contributions, and then, Peter, you can continue down the list. But these are items where we have led on innovation and pushing things forward in the betterment of investors. But there's another couple of examples here that are big.
Yeah, the other one and the important one is the IA-29 policy of repayment, and it's similar to today's issue. In 2015, USCIS issued a draft memo talking about the sustainment period and solicited comments, but it never actually formalized that memo for a long time. And so before 2015 and until I'd say about 2017, all projects would require an EB-5 investor and their family to be invested until the IA-29 petition to remove conditions to get the permanent green card was approved. So you had to wait for adjudication of that form. And in reality, that sometimes could extend 3 years beyond the having been invested for 5 years. And if you compound that with backlogs for China and others, then that was a very daunting reality. In 2017, USCIS updated formally its policy manual, clarifying that this just needed to be invested through the end of the conditional residence period. That's the sustainment period. So the 2-year period that you're holding on to your conditional green card. So from the date of filing of your I-526 petition to the date that you've had at the end of your 2-year conditional residence period, your investment needed to be sustained. You could file your IA-29 petition. You did not need to wait for approval to be repaid. Now, all those projects before 2017 still required adjudication. But around 2019, we had many of investors in our prior project that were hitting that 5-year investment period and had already started filing their IA-29 petitions. But the documents still, the legal documents, that still read that they had to wait the additional time for adjudication. We voluntarily changed those documents. We're probably the only regional center in the nation to do so. And that enabled us to start repaying our investors sooner than they otherwise, bargained for at the time of investment. So, we have a ways to go, and we'll talk about this. And we're doing some things already, and we're also waiting to see how USCIS formalizes this rule. But we have a track record of stepping up for investors. The other here is just our litigation that Colin alluded to earlier, where in 2020, basically through an unlawful regulation by USCIS, the program stopped and families could no longer apply. We won that case and we brought EB-5 back, but our work wasn't done. Soon after that victory, USCIS, the program expired, and we filed a lawsuit, and that helped us to actually participate in the giving feedback on the legislation that ultimately resulted in the Reform and Integrity Act. And then most recently last year, once we finally got the Reform and Integrity Act, USCIS, its implementation, attempted to cancel all regional centers and set back the industry for likely another 2 to 3 years. We won that as well, and able to provide a established and secure floor for EB-5 regional centers and investors so that they could proceed with their petitions. So we have a strong track record in this regard, and we're very proud of this record. I'm very proud of this record, and we're looking forward to doing the right thing as we move forward. So now, that's kind of, at a policy level, we have this guidance that's recently issued. We expect USCIS to publish a rule to formalize this as codify it, as we would say, in a regulation. That will take some time. In the meantime, I think we're going to see a lot of activity, both good and bad. We're going to see some innovations. some compelling projects. We're going to see a lot of investor activity and questions, but we're also going to see some challenges potentially to this implementing of this sustainment period definition. So that's all the policy aspect. There's still a project aspect, and that's what we want to focus on next. What does this mean in terms of EB-5 projects?
With all of the discussions that have been taking place around sustainment period and what does it mean? Can we get our investment back after 2 years? That is a simple question that people are seeing this and asking and wanting clarification from. And I think this is the moment that we all need to take a look at the reality of timing with EB-5 from an immigration perspective, as well as from the investment perspective. We've always talked about EB-5 having 2 tracks. It's the immigration, it's the visa, it's the green card, and then it's the investment project, the job creation itself. They're 2 separate timelines. Previously, USCIS was the holdup. I-526s were slow, adjustment of status was slow, and 829s were even slower. Then on the investment side, it was really according to the project. If you're hopping into a moving train and that project's already under construction and it's already on its way to completion, you have a pretty good idea of what that construction completion date was going to be and when it was operating. And it was more than likely that the project would probably be completed before the immigration processes, thus leaving you either fully invested for a longer period of time or redeployed and sustaining your investment until the I-829 can be filed. And depending on your documents, if you're with us, the moment you filed your I-829, you enter a redemption phase where we work to redeem the investment and pay people out, and they complete their cycle with us. If you're with some other regional centers and things like that, depending on the documents, that will be the controlling language. You might have to wait until all investors actually get their I-829s approved to get repaid. That's in the worst case scenario, and that could take you 10 or 15 years, depending on what project you signed up for. But the important thing is today is to talk about what is the real drivers of the minimum investment term, what's behind it, and why is a deal 5 years? Why is it 6 years? Why could it be 2 years? Or why can it not be 2 years? That is an important conversation that we want to have right now. So what people really need to understand is to start that a project being 5 years in the beginning really had nothing to do with USCIS. It was the market. It was the investors. Investors were pushing where money would go. Investors were choosing projects. And ultimately, it landed on about 5-year terms. Why? Because projects of the size to get institutional quality protections guarantees, to get high quality sponsors, to get the guaranteed job creation, to get good quality assets in good quality locations, these projects happen to fall into a certain box. Years and years ago, you would have seen actually 6-year terms and then even 7-year terms in the very early days, because there just wasn't a lot of competition. There wasn't a lot of choice. And a lot of those deals were actually much longer than 5 years. But ultimately now the investors and their demand for what kind of projects they wanted to go into, the real deals were 5 years. Is anything actually promising less? Potentially, but the actual asset itself also has constraints. It also has realities and construction schedules and development timelines, senior lenders and other players. And we're going to talk about that right now, because EB-5 investors can't do this alone. It's not just an EB-5 investor that is actually driving the decisions in the market making for an EB-5 deal. One, your project probably has a senior lender. It probably has a bank that's involved, and you really want a bank involved because it's low cost financing. It shows an institutional set of eyes, protection, and a really, really smart player that's playing alongside you if you're in a bridge financing or a mezzanine piece as well. The senior lender, if they sign up for a 5-year timeline because that's reasonable for an asset, they are not going to allow a mezzanine lender or a backseat lender to have a term less than theirs and then somehow throw the project into turmoil if the developer didn't pay you back in the 2 years or 3 years or whatever it is. They do not want you disrupting the developer from completing the deal and potentially risking their collateral and risking the project finishing and then putting their dollars at risk when you're supposed to be second in position with a mezzanine loan or equity. So the senior lenders have their own terms and conditions in order to fund a project, and those kind of have to be met in the middle by all parties in order to get them on board. Bridge financing. Almost all deals in the EB-5 ecosystem now have bridge financing and capital that comes in while EB-5 is not available. That bridge financier needs market terms to know that this deal is going to get completed. It's going to get fully funded. It's going to get built, delivered, operated. It does not want disruption either. So if the EB-5 loan or the EB-5 investment was limited to 2 years and they're pulling money out of the deal in the middle of construction, you can imagine how many questions that might raise with both of those institutions, one being the senior lender, one being the bridge financier. And then for the developer, the basic request of developers in doing any of these projects is that they need to be fully capitalized, and they need to be capitalized for the entire deal for as long as it takes to reasonably complete it and not get disrupted and have money yanked out and or throw them into default on their senior loan or the bridge financing. But the cost of that capital needs to be feasible as well. So they're searching for a holistic solution to solve the full capital stack that's reliable and something that doesn't put them at extreme risk during the middle of construction. So the other players in the EB-5 ecosystem do play a role in deciding the term length of a deal. So when you're being pitched a project and it says either 5 years or 4 years or 6 years, look at kind of the asset itself and see if it's reasonable. If somebody's promising 2 years, is it a deal that really goes start to finish and it's really done in 2 years to where it's organically worth a value that you could be recapitalized, paid back, and exit? If it's not rational, then you're theoretically disrupting a normal process, and disruption is risk because ultimately the chance of somebody not being able to uphold the promises that they made in that situation are higher, higher, and higher. And especially if it's as expedited and or aggressive as 2 years versus a project needing 4 years, 5 years, or more. There are other things that are not people, they're not players that will cause a development schedule to be made. So the things that will determine how long a project takes, one, your equity structure, whether it's equity, mezzanine debt, or senior debt, your money is going into the project at a specific time. Senior debt is the last dollars to go in. Equity is the first dollars to go in. And then the mezzanine debt or the EB-5 typical position, that's going to go in only after 100% of equity is already in the deal. If this new guidance is suggesting that your 2-year clock only starts after your money is actually made available to the JCE, what day is that? It's not the day that you invested. It's not the day that you filed an I-526. It's not even the day that you put in all $800,000 and transferred it to the NCE. If it's not made available to the actual project, the clock hasn't started. So for somebody to go into this and file an I-526 and say, all right, 2 years from now, I will be fully repaid. This is great. The clock hasn't started, nor do we know the exact day of when that clock would start, because as a lender, there are protocols, procedures, and loan administration policies that you're normally going to follow. If you are the mezzanine lender, you're going to make sure 100% of the equity in your collateral is in the project first. So if the equity at the beginning of a project has not fully been expended, you need to wait until all that money's in until you put in the first dollar. Also, if all of a sudden there's a very large project and you have lots of investors, are you the first dollar to go into the project or the last dollar of the EB-5 to go into the project? Because there's a $50 million gap between a whole bunch of investors. The first investor might be putting his money in 10 months, 11 months, 12 months before the next investor. So when does the clock start? I'm just trying to highlight the realities of trying to pin a tail on the donkey and call it 2 years when it's really feasibly not going to be 2 years, even if you follow all the guidance, ignore all the conflicts and or contradictory language with the INA statute and the things that are around it. 2 years is still a really fuzzy number when it talks about the actual administrative process of getting to 2 years. And then the exit, the actual business model, whether it's rental or for sale, you have master plan communities with single family homes. Those projects are 10-year deals. They're no way going to be repaying you in the middle 2 years when they only make profit on a project probably in the last 20% of inventory. There's no way they're talking about 2-year deals. So then what position did you want in your EB-5? You know, there's people that always talk about, oh, I want to be senior. I want to be first position. I want to be the most protected. Well, in that case, you're the last money in. Your clock is the latest to start. You've got a whole different timeline that's not 2 years. So for the mezzanine debt in the middle, you're waiting for the equity to go in 100% and then contributing your dollars. But then again, not all EB-5 dollars are entering in one day. You are going to look at the loan draws and you're going to pay bills on a monthly basis. If they only spend $1 million with construction, you're only going to give $1 million to that project. And then you're going to wait for the next set of invoices next month, look at what they have completed, what kind of dollars they're requesting. And if the inspections and all of the progress checks out, you're going to issue another draw that 800,000, 2 million, whatever it is, but you're managing it on a monthly basis. You're not taking every EB-5 dollar and just making it readily available to the project on day one. What that means is you have a lot of different 24-month timelines. And I built this chart just very simple to try and just kind of exemplify the difference of timing that you can run into that, you know, can possibly move the needle significantly on how this works. So to kind of focus on one thing, the red part of this chart is the developer equity. It's the first money to go in. On the left side, we have a theoretical $120 million project. 50% of it is a senior loan. 25% of it is $30 million. And then you have the last 30 million is equity, another 25%. But here's the breakdowns. In the construction schedule of spending money, in pre-development, you might spend a year getting permits. You're going to get entitlements. You're going to get a building permit ready to break ground. And then construction starts. This is typically where all EB-5 wants to see a deal, because you do not want to be funding your dollars into a project that's not creating jobs, doesn't have completion guarantees, doesn't have a bank loan in place. And typically in pre-development, none of that exists. That's the left side of this blue bar here. Then when construction starts, you're moving into this, call it a reasonable 24 to 36 month period to deliver an institutional quality asset. 250 apartments, 150 apartments, maybe 400 apartments, whatever it is, it's probably going to be anywhere from 30 to 36 months. And that is where you're starting to burn off the remaining amount of equity. So if you've got 25% equity, if it's not land costs and permits and fees and soft costs, they haven't spent their 15 million yet. Or the 30 million that they're putting in. I'm sorry. The 30 million might last another 8 months until they've actually spent it on the early construction dollars. So then at that 22nd month, the first dollar of EB-5 mezzanine debt will get spent. That first dollar's clock starts. Now the question becomes, does it belong to one investor? Does that only one investor actually get their 800,000 in first and they get first priority on that first 24-month clock? Or does it belong to the whole partnership? Does it belong to everybody? Is it split amongst all subscribed investors where none of their clocks will start until the entire group has all their money in, contributed to the JCE, into the job creating entity? And that was an opinion that we saw online, that for the fairness of a limited partnership and to have priority given to all subscribed investors, there was an opinion that it was going to be 24 months from all the money being completely into the project. I don't have that opinion. That would be detrimental to a lot of people if that was the case. It would be a massive divergence even from the old policy that we had. But you can see the argument of whose dollar is that. It's fungible. It's a bucket of money. Who put in that dollar? Well, there's all these dollars mixed into a bank account. Do you assign it to the earliest investor, or is it given to a later investor? These are questions USCIS needs to answer to be fair to all of us, to make sure that there's operating procedures in place that we can all follow. Everyone gets approved. Everyone gets what they came for. Everyone's happy. Until then, you're dealing with the fog of war. So getting into the EB-5 mezzanine debt, that $30 million, that 25% of the deal is going to get spent over time as those construction draws come in. And then ultimately it gets into the senior loan. The senior loan then is starting to spend their money. But if there's bridge financing and all the EB-5 investors haven't been found yet, how many of the EB-5 dollars actually show up in the middle of this whole process? And it's actually curtailing a senior loan. It's replacing bridge financing. It's doing something where it actually starts later. You can see this 24-month clock really start to slide. And then if your investment from the beginning was a senior debt, you're actually not going to avoid being the very last dollar into the deal because that's what you signed up for. And if you put in all your money on day one, the lender in the loan documents, the loan administration process is not going to let you spend any of it until you get to here. You're going to wait because you want your collateral in place. You want all the developer equity. You want any kind of mezz. 100% of the collateral needs to be in place until the senior loan starts lending, which means that even if you signed up over here, the money is not going to be distributed and placed into a job creating entity and handed away, put at risk until it's actually your turn. That is month 32 or 33. So even if somebody promised you 2 years and they took your money and you're the senior debt position, you're not entering this project until month 34 if they're actually following the right traditional loan protocols for administering a loan. If it's the mezzanine debt, it's going to go earlier. You're probably going to be spent starting around month 22 of this example. If you're equity, you very well could be spent the first days. But you signed up for equity. You took the risk. You're the owner of the deal. Your money gets spent early and it gets spent first. Your clock technically started earliest, but you own the deal. You're sticking around. You're on the covenants. You're on the all of the promises and the guarantees and all this stuff as an equity owner. You're not really looking to exit this deal before it's actually max value. There's no reason for you to want to be in equity if you're exiting in the middle of construction because that's not max value. So that position, thinking about 24 months, is not exactly where you'd want to be either in a single asset scenario like this. So this is a very long-winded example, but it tells you how complicated the idea of 24 months could be and trying to pin the tail on the donkey. So please contribute into the chats if you have questions. We're going to come to the Q&A. I know I'm saying a lot, but I think it's really important to see that it's not as simple as just writing down on a white piece of paper saying 24 months and then having that marketed. I want everybody who sees somebody offering 24 months to take a really strong look at what is being sold to them, because based on all of this logic and the way that business is done in the commercial real estate world and everywhere else, 24 months is almost impossible to pull off based on regular practice. So looking at this, what does a 2-year sustainment period give us if it's 2 years? There's a lot of benefits for the investors. It's a quicker path to a green card. It's a quicker path to recovering their money, shorter time at risk, potentially a more transparent market because you know where you're heading. It brings complications. Administering it from a project perspective, if a typical high quality real estate deals 3 years, 4 years, 5 years, whatever it is, if you're supposed to pull money out in 2 years, you have a problem. You have complications. Senior bank loan is going to look at that very complicated. Bridge financing is not going to want to participate. It's complicated. The thing I fear most for the EB-5 industry, we fought really, really hard to be a good steward and a good manager of EB-5, to be a partner, and we have tried really hard to correct the reputation of EB-5. What I fear most is that we are about to take a massive step back as an industry with false promises, bad marketing, over-aggressive sponsors that are going to do and say anything to get a hold of your money. And that is going to be potentially the next big blow up in EB-5, is that a massive promise is made that was never realistic or able to be upheld to begin with. And then people end up disappointed and they start pointing their fingers at the EB-5 program and not the people that made those promises and the people that made those mistakes. That would be a massive step back for all the work that the good people have done in EB-5 trying to make this a better program. Legal challenges. Peter mentioned this earlier. This is going to be dicey for even the good actors, because imagine if we find a way to a faster delivery, a faster path, a shorter investment term, and then another group sues over the concept of a 2-year validity or the 2-year sustainment period. And then all of a sudden it gets wiped out. And then there's other people that end up getting denied because of a standing court case or case law that actually shows that they should have not been repaid in 2 years. They did not hit their sustainment periods, and their 829, their permanent green card, and their path to citizenship is essentially canceled. That would be the worst case scenario where we thought we were doing something good. Somebody sues over it after the fact, and then everybody's denied. That would be a problem. Confusion. After everything that we've said and everything that we've done and everything we know about real estate, this is confusing. So in the end, there's opportunity. There could be massive benefits. There's some things that we need to work through. We need guidance. We need experts to get on the ball and start reading every piece of information they can get out of USCIS. And then after we have a clear path and understanding of what we can and we can't do, we need to optimize. What's next? Where do we go? What do we do with this? We, since the RIA, have already thought smaller assets, faster deliveries, faster processing. All of this stuff says that the industry needs to start moving towards smaller projects. So when we say that, you want faster construction schedules, simpler assets, predictable cash flow, and we want a multi-asset and a multi-portfolio approach to diversify and to stagger delivery, stagger your job creation, stagger all of the risk, and then actually start pocketing completed projects, cash flowing assets that are fully done, stabilized, and then just be adding the next one as you go and leverage that strength as it's getting built. Operating cash flow. If there was a multi-billion-dollar REIT out there that had a bunch of apartments and they were just building one more, it would be the ideal scenario for an investor to have that kind of certainty, that financial backing, the performance, that proof of concept, and proof of what they're saying is actually real. That operating cash flow and that bucket of money, that credit line that effectively would be able to redeem investors on a on-demand basis whenever it was needed. That is the really the holy grail of EB-5 structures. And that's where we were already heading. Before this announcement of a sustainment period being dropped to 2 years, before all of the confusion, before potentially false hopes being distributed across the internet, we were already on this way. Everyone that has seen our webinars or paid attention to our emails and the other presentations, everyone knows that where we were heading with our RISE fund and our legacy fund vehicles, we have 15 assets in the portfolio on their way. 1900 Broadway, the tower, that is going to be delivering in January for rent. Then we have 5 more assets that will be completed by the end of 2024. One of them is actually already open and renting as of this month. So by January, we're expecting 2 assets to be cash flowing. Then by the end of 2014, it's going to be a total of 5 or 6, depending on the fast construction schedules of these little guys that are on the screen here. And then by the end of 2025, we will have a portfolio of over a dozen assets cash flowing. And that's 2.5 years from now. Legacy Fund and RISE will be in a better position to serve short schedule investors than any project in the country. It wasn't official. We weren't forced to do it. We were doing it anyway because it made sense given the policy, the financials, the assets available to us. And we just happen to be a residential developer that loves multifamily in the San Francisco Bay Area. We were meant for this. It was easy for us to do. In being vertically integrated, we can actually engineer this kind of offering and make it happen. Whereas a lot of other guys, if they're just agents in the middle, they can't do this. They don't have the ability. They never will. But they'll tell you they're independent. They won't tell you they're incapable. They're just going to say they're independent. So we have been on this track to deliver faster, shorter turnovers, but it was for the investors. Our legacy fund has equity investors as preferred equity, and then we offer debt for those that prefer that vehicle. With these 15 assets in process, there will be a new share class offered in 2024, a whole new offering. That is where we would invite everybody now that if you are interested in hearing about this vehicle and how it's going to be doing quick deliveries, smaller assets, faster turnover, we would encourage you to contact us, make appointments. And Kyle, if you'll offer that link, it is important that people see this. Even if you just want to compare us to what else is out there, you need to know what this is capable of and compare it appropriately. So now we're going to open up for Q&A, and I'd like to invite Nima Korpivaara from KLD Attorneys, one of our most trusted advisors in the EB-5 space and somebody that has seen a lot in EB-5. I know you were in the room somewhere back there, but now we need you to actually come out and be on the stage. So
a person was asking about elaborating more about investing by profile versus investing by project. Any difference between investing in RISE versus investing by profile. So this is on our website at BehringEB5.com. It's more of a convenient filtering device to when you're doing your due diligence and considering an EB-5 project. You can approach it by the project, what type of project it is, or you can approach it in terms of how you wish to invest. How do you want to structure your investment in that project? So it'll lead both ways, will lead you to the same option or same goal, which is a qualified EB-5 project to get your green card. So we have 1900 Broadway, we have our RISE fund. Both of these projects will have the different investment options for you. That's what makes us unique in the industry, to offer multiple investment strategies for you, so to meet your own personal investor profiles or investment goals while still getting the green card. So you can, we'll offer more details and answer your questions about these different investment options, but in short, they are available for both projects.
Hello, Nima. Thank you for joining us. I know you've been here and you've been able to kind of hear a little bit about Peter's announcement of the policy, interpretations, things like that. Did you have anything to add as far as your understanding or things that we may have missed? But I do want to welcome you and thank you for being here. And if you want to do a quick introduction of you and KLD, that'd probably be good for any newcomers.
Yeah. Hi, everyone. I'm Nima Korpivaara. I'm a partner at KLD, full service immigration firm specializing in EB-5. I don't think you really need me to say much. You gentlemen did a really good job. I think, certainly, the procedural history of how we got here that you covered, Peter, is great. And then Colin, I think, from the clients that we speak to is, understanding the difference between a USCIS timeline versus a market term or how real estate investment moves forward is really important. I think, one thing that we think about on the attorney side is USCIS is really moving towards a positive direction, right? When we went from, refund of your investment from 829 approval, then to 829 filing, then the RIA, then Chart B, and then NVC accepting Chart B so we don't have aging out children. And now we see the updated advisory guidance on 2-year sustainment. All great, all trending in the right direction. Also, the reason we get all these things is because USCIS can't do their job. So when they realized that 829 approvals were taking 5 years and now they had a massive problem on their hand of raising the risk profile for investors, their solution was not getting 829 processing times down. It was to change when you could get paid back, right? So now it was 829 filing. Then when we got hit with the issue of, well, the visa categories are now oversubscribed and USCIS is not able to do anything without congressional action on issuing new visa numbers or changing derivative dependents, not counting as visa numbers, we got into the redeployment rather than offering clear guidance on redeployment or changing the sustainment period. It's the same story. It's 829 filing. It was only once Congress came in with the RIA, now we get this advisory opinion. So trending in the right direction. I would be fearful of any project or any marketing that is already out there saying 2-year investment. We would really have to see, and I don't know if Greg is here, but Greg has done a really good job in the various WhatsApp groups saying the CFR, the Code of Federal Regulations, or I think Register, has not been updated to include this USCIS advisory opinion. This is USCIS interpretation right now. It is not yet law. And we wouldn't want to see anybody marketing or trying to get attention or subscribing investors on the fact that it is law. But, for any investor that has been on the fence, has been fearful of a redeployment beyond a 5-year term or beyond a project that they've been invested in, this is significant news. I think for me personally, I would like USCIS not only to codify this as law, but I would like to see Chart B become permanent. Not permanent, permanently current. So then we don't even have to have the fear of retrogression, aging out children, people not getting the benefit of filing the 485 and EAD and AP.
Yeah, Colin, you're on mute.
Yeah, that makes it a little difficult. Peter, is there another question that you'd like to take, or any of these that we can take live that are coming through?
I'm still catching up.
Yeah, there's quite a few.
But Nima, maybe you can address this question. Someone's asking about estimates on how long 526E petitions and 829 approvals will take. And so just kind of trends and processing times and expectations.
I think, if you've seen the RIA, there is, a mandate from Congress for USCIS to get processing times of 526 to 6 months or less. In order for USCIS to do that, they need to publish a fee study that justifies how many hours they have in processing these cases, and then setting a new filing fee to be able to actually process a 526 approval within that time period. USCIS would use those filing fees to add more staff. I believe, pre-RIA, pre-COVID, IPO, which is the division at EB-5 the division at USCIS, which handles EB-5 was 200 plus. I don't think we're near those numbers. Until we see that type of full staffing and increased filing fees, I would say, 18 months is a fair and conservative timeline for approval of the EB-5. There's only been about, I think, 45 shy of 50 total approvals post-RIA, so post-September of 2022. And I think about 90% of those have been for one project. The most recent approval for, I believe, Can-Am was at 13 months. If we start seeing a trend of approval after approval for 13 months, I think that's really great news. Then we can kind of forecast 12 to 18 months for approval of the EB-5 application. In terms of the 829, if you look at the USCIS website, it's 5+ years at the moment. But of course, that same fee study that requires USCIS to get to 6 months or less on the EB-5 requires 8 months or less on the 829. Anybody that has filed a post-RIA 526 or is thinking of filing a post-RIA 526, we're talking about a minimum of maybe 3.5 to 5 years before you're going to be filing that 829. So I'm pretty confident USCIS has enough time to meet that 8 months or less time frame.
And they've been I think they paused it for a moment, but they were in the process of digitizing 829 files for more efficient processing. But I also would want to share too that we had an investor that filed the 829 petition and then waited a fair amount of time and filed a mandamus action. And Nima, maybe you can share a little bit about this this procedure, but and had the 829 approved in a total of 7 months. I don't think, as you said, I think 3 to 5 years from now, no one's good. Few people will need to rely on that that procedure with respect to 829 petitions, but at least there has been some positive movement in that regard.
Yeah, at a high level, these mandamus actions are filing a lawsuit against USCIS for prejudicial and unnecessary delays in processing times. This is a practice we've been doing at our firm for about 7 or 8 years now. The issue that we run into, though, is for somebody that's outside of the United States, and this may not affect them on the 829 because they have a green card, they're in the US. But for somebody outside of the United States, the proper venue to file a lawsuit against USCIS is the district court in DC. The district court in DC is unanimously dismissing all these mandamuses. They just don't care about the argument of prejudicial delays. The other courts, specifically the courts in California, as well as a few other states, are very receptive to these arguments. And we have seen approvals both for the EB-5, the 526, as well as the A29. In general, before you are going to have any discussion, with a AUSA, an attorney representing USCIS from the Department of Justice, it's going to be 6 months after the filing of your application. And then that's when you start the conversation with the attorney. They speak to USCIS to ultimately get this decision for you, this approval of the EB-5 or the A29. Our expectation is, 3 to 4 months is a good time frame in a positive setting to get that approval. 7 months for an A29 is also quite good, especially if that's less than 5 years overall processing time. If I was representing someone that had to file in a DC court, I would want to be a 5, 6, 7 year waiting time before I would confidently say that that's going to be approved. But there's a few different strategies to discuss there that could be helpful.
Nima, one of the other questions too, this is a little bit off the topic of the sustainment period, but talking about 956Fs and whether they're being approved, ones that are pending, and pre-RIA projects and people that have filed. Can you take people through like what a 956F approval means as far as validity or USCIS support? What does it actually mean? So,
before the RIA, it was called the 924. It was, an application for a regional center to sponsor a project. An approval of that application gave you what's called deference, meaning that once a project has been approved by USCIS, when you file an investor's application, they are no longer doing a review or a re-review of the project documents. They are only looking at the source of funds. So in theory, this would cause much faster processing times for investors once a project has already been approved. Under the RIA, USCIS loves numbers for their forms. So we went from the 924 to the 956F. The 956F includes every element of the project. So, is this a valid business plan? Does it meet all the requirements outlined in matter of HO to be a valid EB-5 business plan? What is the job creation numbers? What are the inputs used there? Can we validate that job creation? Let us now look at your offering documents. Are there any impermissible redemptions? And all the other policy regulations in seeking approval. Once that 956F is approved, you now have deference for the project. So once again, when an investor submits their EB-5, there's no re-review of the project. There is no now investor fear that there's some unknown project issue that is going to cause denial of their application. Under the RIA, though, the 956F must be approved before an investor's application has been approved. Those 956Fs were, again, supposed to take 8 months or less to be approved. It seems that the average processing time for those now are varying somewhere between 10 and 13 months. And of course, anybody that has F approval is going to market it heavily, right? That we are a safe investment choice. It should be clear that the approval of the F does not mean you are now a safe investment choice. It just means that your project has met the requirements of securing approval with USCIS. There is still the moving forward in development and job creation of that project, and then, of course, the financial viability to repay. From my last count, I think only 5 Fs out of 100 plus applications have been approved, and 2 or 3 of those were the result of litigation, meaning that those regional centers actually moved forward, filed a lawsuit against USCIS for unnecessary delays, and were able to secure the approval. So again, we're really early in this timeline to say what is a natural approval from USCIS for a 956F. How long is that going to take? How long is the natural approval for the 526? But my hope is as we near the end of the first quarter of 2024, we have data that we can refer to back up our statements on processing times.
So the big question, like we see it in people's sales pitches trying to compete against us saying, hey, they don't have a 956F approval for a project that is 924 approved. What is the advantage or disadvantage in that situation?
Yeah, I mean, I think so. Okay. I mean, I'm not the most political person, but I'm trying not to get myself in trouble on such a sunny day in LA. I think there were projects that had 924 approval, so pre-RIA approval. And as a result of the RIA, the project just no longer could be approved, right? So a really good example would be a project that qualified for a TEA by merging, the unemployment of 12 census tracts. That is no longer a post-RIA rule. Thus, that project no longer qualifies as a TEA. And then maybe there is no 956F filing. I would say specifically with Behring, the RIA did not change the structure, the documents, anything really material, specifically to the 1900 project. So the 924 was approved. We would expect the 956F approved as well. I think certainly when you are speaking to investors and you want to give confidence to investors that their EB-5, their 526 application is going to be approved, the 956F is important. USCIS has reviewed our application. They've approved our project. What it does not mean, though, is that that project is going to be financially successful. It also does not mean that a 956F that is not yet approved is not going to be approved. You guys have certainly filed your fair share of project approvals. There are regional centers that have filed for 50 plus project approvals in their history, with all of them approved. You would expect that knowledge has not disappeared as a result of the RIA. The reason their application is just not approved is because of the randomness of USCIS. So, of course, anybody that first moved in filing that F application, there are some regional centers that filed that F long before the settlement agreement with USCIS. So as a result, they saw their applications approved first. There are other regional centers that say, this is USCIS. Unless we have a settlement agreement, unless we have forms, unless we have codified laws and regulations, we're not filing an F, right?
Yeah.
And so, those regional centers, such as you gentlemen, it's just the F is going to be approved a little bit later. If there was something preventing the F from being approved, I would be happy to share that. But I think it's just a waiting game now.
Yep. Quick question, Nima. Talking about processing times and wanting the EB-5 community to be able to hang their hat on something and be able to say, that was your commitment. You were supposed to process this in X amount of time. Now I can file mandamuses and expect them to be, not dismissed by a judge. Our understanding now is that we need to wait for the fee study, and we need USCIS to catch up and then actually start honoring the statute of 90-day approvals, 180-day approvals, all the stuff that's in the RIA. At what point is USCIS in some sort of default on this fee study when they said it should be done less than a year? Is there any way the community can actually push that along?
So yeah, I mean, they are in default, right? They're already way behind on, promulgating the regulations, meaning giving us guidelines on exactly what their interpretation of the law is. They're behind on the fee study. They're behind in getting the processing times down to what was expected. What can we do about that? Of course, you can always go back to the original Behring versus USCIS 3, notify the judge and the DOJ that they're in default, and try to get to do something there. Of course, investors have the options to, as individuals, file lawsuits on their own behalf. I think the question when it comes to suing the government is, you may be right, but is another federal department of the government going to put the feet to the fire of another federal agency? We know in DC, the courts will not put the feet to the fire to USCIS. Is that unfair? Oh yeah, absolutely. What can we do about it, right? USCIS, I think, is a petty organization. When we started filing these mandamuses, because their processing times were disgusting, for lack of a better word, 3, 4, 5 years, USCIS changed their policy on first in, first out, the visa availability, right? Because again, they didn't do what was needed to get the processing times down. They just goof around with the regulations so they can avoid litigation. I think everybody in the industry can say, the RIA is mostly positive. The direction USCIS is trending in is mostly positive. And so as an industry, we may not be so gung-ho on filing immediate litigation with them. we may want to give them, a few more months into 2024. And if we still don't see results, then start pounding the pavement with litigation. I think one thing with EB-5 as a whole is there's always been different fractions with different interests, and that has led to lobbying and litigation from multiple groups without one unified voice. I think, whether it's IEI USA, whether it's AILA, whether it's you guys as regional center, I think the industry kind of wants to come to some sort of consensus on a voice in one direction and move forward. And that kind of means time for everyone to get on the same page. But I don't think there's any regional center or anyone in the industry that is happy over long delays in 526 processing or 829 processing.
No, not at all. Peter, are you seeing a question that you'd like to bring up here? Peter, you're on mute if you do have anything. But
one quick question. I think Nima, you may have addressed already, but there's the EAD, the 5-year EAD versus advanced parole. Are they still getting the combo card? Is the APs only 1 year and then they need to renew within 6 months before that expiration?
Here's an answer you very rarely get from me. I have no idea what's going on. EADs that are approved post September 27th should be for 5 years. There is no rule changing the approval time period for an advanced parole. It should be 1 year. But of course, we have clients that are receiving 5-year approvals. We have clients that are receiving 5-year EAD and AP as a combo card. We have clients that have filed at the same time or after the individuals receiving combo cards, and they are receiving 2 separate approvals. One, the physical EAD card, and then the AP, which comes in the form of a 51211. Some of these 52111s are approved with incorrect photos. It's just a stranger rather than a photo of yourself. I don't know what's going on. My guess is when you make an executive rule, as Biden did, to change these 5-year timelines, you then have to play a game of telephone of contacting whoever is in charge of liaisoning with USCIS, and then USCIS has to distill that information down to managers down to officers. And I think somewhere in there's a break in the chain. And that's why you're seeing 5-year approvals for the AP, 1-year approvals for the AP. These were always historically combo cards rather than 2 different documents. It was the increased processing times during COVID where we saw 12 plus months for an EAD that broke these processes apart. USCIS kind of triaged and said it's more important to let you work than it is to travel. And if you do need to travel, make a USCIS office appointment. We'll get you a stamp to go out. So now the fact that we're seeing combo cards, I think that's really positive. That may be indication that we are in a place that EADs and APs are back to 90, 100 days. And maybe they do plan on doing the APs for 5-year periods, even though there's no advisory or no executive order on that. For the people that received a 2-year EAD and a 1-year AP, those generally can be extended, 6 months or 90 days before their expiration. Early 2024, Q1 2024, we're supposed to see the rollout of this online automatic renewal process. The suspicion is this is going to be an enhanced form of the USCIS online account system that you already have, so that you'll be able to get a notification and click a box for extension. So that's a little bit of wait and see. Otherwise, harass your attorney, make sure they know that your expiration is coming up with plenty of notice, so nobody has a gap period on their work or travel authorization.
Okay. Yeah, so getting some economic questions and people just kind of asking about varying markets and interest rates, what that's going to do for projects, what's the outlook, what is a reasonable return expectation for IRR over the next 5 years. These are all specific underwriting questions that are really revolving around our assets, the project, legacy funds, portfolio, the RISE fund. Happy to answer these questions directly on consultations because they're going to get granular, and we do want to present the information. We want to present it in full and explain it fully, and then also give you the data and the reports on everything that we have showing the San Francisco Bay Area and its collective capability. We were going to talk about our next markets report today, but we just seemingly ran out of time. We're already running long at about 90 minutes, but we are going to have another event that will talk about markets, the economy, interest rates, and what that does for your EB-5 underwriting today. Because a lot of projects that people are looking at have been under construction or working for multiple years. The pro formas and their potential, returns on investment and or their cost structures probably have not been updated. If there's been a 39% construction inflation across the board nationwide for certain assets, if that asset cost $100 million to build, today it probably cost $139 million to build, not the original 100. Where's that next $39 million going to come from? A lot of projects don't have a good answer for that. However, for us, we have all of that information and more, and we'd love to talk about it. It's just going to be a little too granular for this conversation to end it anytime tonight. So we definitely want to get into it, but please do make those appointments if you are interested. Other questions, Peter, if there's anything that you see?
Well, someone was, I don't know if we gave it, but someone was asking about, just a 1900 Broadway update about our current project in construction. So we do have that to show.
Correct. Yeah. So we do construction updates periodically for all the investors. This one happened to be for the end of September. 1900 Broadway is over 85% complete. Big tower, been working on it through COVID, getting through it, 2,300 jobs already created. We are expecting to start renting in January, and ultimately all of the jobs have been created for all the subscribed investors that have already joined us, and we have extra job creation on top of that. That's kind of a nice benefit because for new investors that are subscribing, as long as they're subscribing to the project before the job creation is totally done and any bridge financing is still available, you're going to get credit for all these jobs that we've already created from the day that you started investing. There's a little bit of economic data in our reports. We talk about new employers and market movements and other economical items going around our tower. Then, ultimately we send out, the photo updates and explanations about progress. So this is normal for our platform. You'll get this presentation probably once every 30 to 60 days, depending on specific developments, but the job creation's in and you're starting to see the property shape up with the design renderings versus the actual site. It's fun to see it evolve over time. Really excited for this thing to launch after the new year. So these can be provided. Looks like Kyle threw it up there if you want to actually download and get a link to the property itself. Take a look. We encourage people to actually come visit us. You can see the site. If you happen to be in the San Francisco Bay Area or traveling to California, Northern California, we're happy to host on site. Peter, myself, we've had Nima on site. He's been walking around the tower. We've probably hosted, I don't know, Peter, probably 70, 80 odd people over summer or more. We've had groups of 10 people show up all at once. We just ask that you tell us ahead of time so we can get helmets and gear and elevator usage. So do come visit if you're interested. But if you really want to see the done deal, January, where it's totally finished and very hospitable, January is when we're expecting to open for rent. So expect these kind of presentations, these kind of reporting and updates, and to stay completely up to date, really throughout the duration of your investment. But yeah, that's a brief 1900 update. And then next time we'll get the Rise construction updates on here. Rise is a little bit different with that portfolio, over 14 assets in it, 5 of them under construction, 1 of them already complete and renting. That's going to be a much larger presentation just because of the breadth of it. But ultimately you get the same quality reporting on that periodic basis. So 1900 Broadway, nearing the end of its phasing, nearing the end of its EB-5 capital raise, almost full. But that's because of the progress and the nearly complete status of it, there's just naturally not a lot left. And then we'll be moving on to our future projects. Here's our groups here. A lot of visitors. Just please tell us ahead of time if you're coming in large groups. And then, we'll drop here for Peter in the EB-5 channel. When we have big market movements and big updates, we will be posting videos on YouTube. You'll be able to see that on the channel, updates for the sustainment period for concurrent filing. Peter monthly does a very, very reliable release of the visa bulletin review, and that gets tens of thousands of views every month. So if you're always kind of wondering, is it current? Can I adjust status? Am I going to be in a backlog? Peter is dropping videos about once a month as soon as the visa bulletin comes out. Nima's on there on different occasions as well, so you can see him doing his best for hard topics, talking about reading the tea leaves of USCIS release of statistics, trying to interpret things that are heavily complicated. You can see Nima on there quite a bit. Besides that, if you guys have any more questions, is there any more, like, you've got Nima and you got Peter here. This is definitely the time to ask those questions, and let's get it on the replay so other people can benefit from it.
Yeah, this is free.
Yeah, free Nima time. I was cheap to begin with. So you pay what you get what you paid for. So let's see. Kyle, people are asking to share the RISE project. If there is a access to materials there, that's something we might want to share. We've talked about RISE. We didn't give a lot of details, but if we could share the link to get to the RISE stuff, thank you. That is where people will be able to take a look at it. RISE is exciting. RISE is a continuation of a portfolio approach that we actually first pioneered 2016. We might even have some investors I saw in here from our Madison Park Fund. That was BRC Partners 4. We did 3 assets in one fund, fully approved by USCIS, 100% approvals, no denials, multi-asset. RISE is essentially taking all those successful strategies and putting them on steroids. We just instead decided to do 14 assets, smaller, faster buildings. 3 of them are UC Berkeley student housing projects. One of them directly adjacent to the campus. There is a massive shortage of housing in Berkeley for the obvious reasons of it being impossible to build anything there. Very excited about those. Student housing, typically recession resistant, and it's UC Berkeley, the #1 public school in the nation. We like it. So with this,
Colin, our last, this portfolio approach with RISE is not new to USCIS, and our Madison Park project is a great example of going full cycle, from investor making the investment, filing the I-526 petition, getting the conditional green card, filing the I-829 petition, getting repaid, and getting the permanent green card. So we have investors in that project through that whole cycle from this similar portfolio approach to EB-5 projects.
Just saw one question asking, is there a difference if you're choosing 1900 Broadway versus RISE? And the vast majority of the difference really is that 1900 Broadway is in a very advanced state. It's been filed for multiple years. It has a 924 approval. It has investors with I-526 approvals. The RIA policy guarantees deference to those approvals. And then the construction for the asset itself looking to be done with the first phase in January and the full building in the end of the first quarter of 2024. It's just more advanced. It's a different style of asset. It's a high-rise tower, luxury location, luxury product. RISE, smaller, faster deliveries, podium-style builds, wood frame construction. The locations are spread out across the East Bay. You have UC Berkeley, Emeryville, downtown Oakland, Jack London Square. There's a variety of different locations for different styles of projects. It's diversified. However, it's not really a project-to-project comparison that makes the most difference. It's actually the vehicle that you're investing in. We have debt-style investments where it's a dedicated mezzanine debt loan-style investment to one project That one project is the guarantor. You have the number one return of capital out of any of the EB-5 products that we have, and it's a dedicated vehicle. The legacy fund is our equity vehicle. This is for people that are seeking higher returns or have a higher cost of capital that they want to recover. Preferred equity and common equity, both available, but that legacy fund vehicle actually plays across both projects anyway. It's part of the portfolio. We're happy to explain more about the legacy fund and the opportunities for common equity and preferred equity. Make a consultation, book those appointments. The RISE fund, it's a continuation of all those successes that we've started since 2013. So with RISE, the legacy fund reaches and actually is a syndicate lender with RISE, doing the same projects, invested across all 15 assets. It's a lot to explain on this call, but it is our vehicle of choice going forward, post-RIA, faster, simpler, and more transparent on schedules and more controllable than trying to do mega projects. That is something that I think the entire EB-5 industry is probably going to be wary of, is going into very large 10-year projects, master plan communities, things spread out over multiple cycles of policy. That's even a risk. So we wanted faster, simpler, and more tangible for our future. And I think our investors want that too. Let's see. Any other questions there? Running a little bit long.
Yeah, one question, for Nima. You've touched on this already, but and I want to complicate it a little bit, just for the sake of our main topic today about the sustainment period and what it might mean going forward. But the question again is, is asking, basically from filing investment to permanent green card post RIA, assuming the implementation of the fee study and these trends that we're seeing with faster processing times. Is it a 5-year period that I'm going to get my permanent green card, from zero to green card? And the twist I just wanted to throw in there is like, well, if the job creation's done and that you've been invested 2 years, could you conceivably file your investment, your I-829 petition sooner than historically speaking?
Yeah, I've seen that point made. The answer is we don't know, right?
Yeah.
Until USCIS gives us some sort of real, published law that says, there is no longer 2-year conditional wait period before you need to file the 829, we won't know. I think from the day that you invest until the day you have 829 approval is also going to be heavily dependent on if you are a Chinese or Indian national. Assuming you're not from a country that's high demand, thus has a threat or a possibility of a backlog. I think an optimistic timeline to have the green card would be, 18 months to 2 years, 2-year conditional period, and then 8 months for the 829. So you would just be shy of that 5-year mark. If USCIS were to get were to eliminate the hold on the 2-year program timeline, 2-year conditional period, then you're looking at 3 years, right? It's important to remember when USCIS created the program and had this 2-year conditional period, it's not because they turned to senators or congressmen or business leaders in their communities. This is based on the rules for marrying a U.S. citizen. You have to have a 2-year conditional period to prove that you still like each other. That's exactly where that rule was pulled from for EB-5. That rule was codified and was law. Removing processing times historically meant that the program was 2 years and 2 days, right? 1 day to file and secure approval of the EB-5, 1 year for the 1 day for the 829, 2 years for the conditional period. So I don't know. If they were to remove that and the projects were able to create jobs, what are we looking at, right? It would be whatever the time period it would take for the funds to be made available to the job creating enterprise and then the job creating enterprise creating the jobs. 3 years. But I think, again, this goes back to what Colin spent most of this webinar discussing, right? I think, investors very fairly want institutional grade development with institutional debt and equity in the capital stack, a very large job buffer, but then they also want their money back ASAP. not all those things go together, right? The attractiveness for an institutional developer to get into EB-5 is that it is lower capital, but the detract for the institutional developer is if they go to a bank, maybe the money's more expensive, but they get the money immediately. An EB-5 regional center that's raising money, who knows? If they're good at raising money, right? If they have a successful track history, maybe they can raise all the EB-5 funds in 3 months. There's plenty of regional centers that have been out there selling the same project in Times Square for 5 years, and haven't been able to fully fund that capital stack. And I think, one point, Colin, that you didn't make, and one thing I try to tell investors is that the reason that we tend to work more with fully financed projects that are creating jobs and have completion guarantees is if you are making a bet on the project, bet that they can go vertical, right? Create the jobs and financially repay you. Don't also make a bet on whether they are actually good at raising EB-5 capital. So I think some project may be out there saying, we'll pay you back in 2 years. But if EB-5 is part of that capital stack for them to go vertical, and you're investor number 5 and they need 50 and they never get past number 5, well, you're not getting your EB-5 approved. Who cares about that 2-year time period, right? And I think, in my experience, it's that education that is missing. I think because of a lot of historical EB-5 failure or unscrupulous participants, people seem to tend to think the regional centers are just trying to take all the money. They're not really aware of the costs involved in bringing a project to market, not really involved in knowing the difficulties in doing a senior loan or an intercreditor or an equity agreement with an institutional developer. And then all the other things Colin said, when the money goes in, when it's made available, when the jobs are created, and how do you safeguard an investor in that process? That safety of your money may just be a 4 or 5 year hold rather than a 2-year hold. It's going to be very, very specific to the project. And I think webinars like this serve a really good point as an education to ask other projects when you're interviewing them, other regional centers when you're discussing with them, how are you accounting for this, this, and this? And then I think, EB-5 investors are smart. They're successful. They've been able to make this amount of money as an investment. So even if real estate development is not their expertise, they should have, a bullshit meter. If an answer doesn't sound right to you, it's probably because it's not right.
Yeah.
That was a very long answer, but
no, it's very helpful.
I'm just here with just anything, pop culture, whatever you want to talk about now.
I think it's great. Just want, I think it is important for everybody on this call or and watching later is ask questions. I mean, that's really what it's all about. You have to ask the questions and talk to others and, talk to your lawyers. And sometimes you'll learn questions that you may not have asked and you come back and ask questions again. That's part of the due diligence process. And we encourage that. And we actually like talking to people and answering those questions. Our calls, you can see our webinar now is an hour and a half, hour and 40 minutes long. So we enjoy that process, but it's key. And reading the documents, number 2, and it's an iterative process going back and forth. And I think that's our goal for this was just really to kind of highlight these issues. There's definitely a lot more to talk about, and there's more to come. Like Colin said, we will have more webinars and more videos on our EB-5 YouTube channel. So I encourage people to see that because we do have a whole plethora of topics there, and we'll probably create more on some of these issues. And we didn't get to everybody's questions, but we'll try to either email us or on future calls we can have that. And then if you have requests for videos or webinars for deep dive discussions on things, just let us know that too, because this is something that's important to us.
Yeah, and Nima, to go to just a normal FAQ here, we have a question from one of our investors who now does have his EAD and advanced parole. With advanced parole, what documents need to be carried on you while traveling on parole?
So the actual approval, so whether that's in a combo card or a 512L that has your photo, the 485 receipt notice, and the passport.
Thank you. Yeah. So we'll probably end up getting a lot of this stuff, especially as a higher proportion of all of our investors are nabbing those EADs, getting advanced parole. We're going to start actually generating that content in these checklists and these to-do items, compliance related, and we'll be posting a lot more of that and distributing it with our investor packages as we go forward, because we just had a significant number of wonderful H-1B and students that have been able to get EADs and advanced parole very fast with the RIA, which is just an incredible advantage compared to years past prior to 2022. So we probably will be providing a little bit more content on post I-526 filing stuff compared to years past. So,
and the good news is while concurrent filing is new to EB-5, it is not new to EB-1, EB-2, EB-3. So this is not a case where when you enter the United States and the border officer that you're speaking to has never seen an advanced parole, right? This has been standard practice. So there shouldn't be any deferred inspection or further questions. If something does happen and an officer is asking questions and they do allow you to use your mobile phone, good time to call your attorney.
One more question for you, Nima, regarding the EAD process, advanced parole. Will a 17-year-old child get an EAD and advanced parole with their parents filing?
Yes, any child over the age of 14. It used to be 16, but shockingly, USCIS as a federal agency had a very difficult time talking to the Social Security Service. So as a result, they've been lowering the age that a child qualifies for an EAD, just so they can get a social and get the benefits that come along with the social. So any child over the age of 14 qualifies for the EAD and AP. Of course, USCIS has made errors, and we know of 11 and 12-year-olds that have EADs, but the rule is 14 or older.
Yeah, good. Thank you very much. Got a happy person there that got that answer. Peter, we had some other questions that were lined up previously. We can also do a last call with the 70 odd people that are still here. If there are questions, if we missed your question, repost it at the very bottom here so we can get to it. But this could be our last call here if we don't get anything new.
And I'll just put my email.
And so Nima, this one of the repeat hardest questions that we get: how long do the reserve categories stay current? What's the opportunity to keep filing?
That's the last question.
It might not be the last question, but it's definitely one that needs answering. How long does this opportunity stick?
So I think, if anybody follows Suzanne's blog, I think Suzanne said fiscal year 2024 is, I think, 7,600 visas. For anybody that is a member of IIUSA or get some of the material from IIUSA, they held their annual meeting last year, and they had a State Department representative that quoted about 8,700 reserved available visas for fiscal year 2024. I think this now becomes a question of how quickly is USCIS able to process both EB-5s and 485s? How productive are the consulates abroad? We know that there is roughly 2,000 pending post-RIA EB-5 filings. Even if you were to say each of those filings is a family of 3 or 4, there are more than enough visas to get everybody through the queue without any delays. The question becomes, if USCIS is not able to use all the visas, the consulates abroad are not able to issue all the visas, and there is visa waste, well, fiscal year 2025 is 3,500 available visas. If a downtick in the number of available visas and an uptick in the number of EB-5 filings, which you would expect, right? This is really the first time in the history of the program where an EB-5 investor can turn to their friends and say, I got my EB-5 approved in 12 months. I had my EAD approved in 90 days. I can get my money back in 3 years. So you would expect the good news about the program, the evidence of the good news would lead to an uptick. I think that's when you start seeing the potential of a backlog. That would be the earliest we would expect that is fiscal year 2025. So that would be October 1st of 2024. There still may be enough initial visas, though, in fiscal year 2025 that we don't see an actual backlog until the year 2025. But then the next question becomes, okay, well, even if there is a small backlog under Chart A, what does it say for Chart B? Because Chart B, is closer in time to the current time period than Chart A is. meaning an investor current under Chart B can file a 45, get an EAD and AP. I think my hope is this is kind of where the program settles. Gone are the days of 17,000 investors a year, and then the programs the issues that caused on the USCIS regulations. If we're settling into an EB-5 program that is happy and healthy, with 3,000 investors, then I don't think we're in a position where we're looking at very long delays for high demand countries like India and China. And I think we'll be in a place where Chart B can keep up relatively close to being current. And so we won't see these sustained, delays for investors. I know investors are generally not happy to hear me say something like, even if there is a delay in the issuance of your green card or the 10-year green card as a result of the 829, you have an EAD and AP, live, work, and travel. Certainly they want the security of having the green card. But I think, you can feel a little bit comfortable knowing that if there is a delay, there are new interpretations by USCIS in place to receive a return of your capital as scheduled, not some sort of immigration delay causing redeployment. And then, if your attorney has reviewed your source of funds and says, hey, this is a slam dunk, this is going to be approved, your project, the attorney has said this is also a slam dunk on the project, or the project has already received F approval, we know the 526 is going to be approved. We know the 829 is going to be approved. We know the 485 is going to be approved. So it's more of a waiting game rather than anxiety or risk. So, maybe a little bit of calmer household knowing that you are on safe ground, just the process is a little bit delayed. Nothing, we couldn't say any of this really pre-RIA.
Right.
Sure.
That makes a lot of sense. Okay. Yeah. So here's a good question, and whether or not it's our last one, we'll let the crowd decide. But I'm gonna just kind of mold it to something that's more general. But the idea of pre-RIA versus post-RIA, the investment, the sustainment period, the project's coming to an end. The question is, if I'm a pre-RIA investor and my project's coming up on a 5-year investment next March of 2024, can I withdraw my investment at maturity, or do I need to wait for the 829 to be filed?
Well,
the project was completed in December of 2020.
It depends if you want to keep the immigration process, right? Under the pre-RIA rules, you cannot receive a return of capital until you file the 829, the end of that conditional period, right? Now, if you've been waiting a long time and you care much more about a return of your capital rather than the immigration process, you can always dump the immigration process, right? Most projects will say evidence, provide us evidence that you've withdrawn the immigration process, whether it's the EB-5, the 485, the 829, and we'll issue you the refund of your investment, right? Or the return of your capital. The question is, if I want to continue the immigration process, and you have not yet filed when the project is ready to repay you, then it's a waiting game. And then that waiting game is also, what is the decision of that entity that you invested with? Are they going to sit on the capital for 6 months, maybe longer? Have they already found another redeployment vehicle? Are they going to redeploy that into another asset? Is that up to vote? And that's where some of the difficulties of these pre-RIA regulations, that's where the difficulties lie. That interpretation of investment period that came out, 2 days ago, is so important.
Okay. Thank you for the answer. So, to kind of sum this up, guys, pre-RIA has pretty clear language that the changes of the sustainment period and the changes are not applying to pre-RIA investors. Why that decision gets made, how anybody thinks that's fair, or what kind of science is behind it is beyond me. But it's pretty clear guidance that they chose that date, March 2022, for these changes to enact.
It also doesn't mean it can't change, right? Again, what we got out of USCIS is an opinion on the website. It's not codified law. So what does happen from here? Does it go straight to codification? Does it go, as what Peter said, do we go through a notice and review period or notice and comment period? Does that notice and comment period strike USCIS to making this valid for pre-RIA investors as well? These are still unknowns. But definitely things are trending in the right direction.
Yep.
Okay. Do we have any last call for a question there? And, we appreciate the kind notes and all the people saying thank you, and that it is appreciated and that it's actually worth something to you. Again, please let us know if there's content or copy out there that you'd like to see. We have the professionals. We just need to know what people want to know about it. We can kind of curate that way. But for this third quarter update, it was going to be broad and comprehensive. And then with this game-changing news of sustainment periods, obviously that became our focus. But I do want to thank our managing director, Peter Bibler, and partner at KLD, Nima Korpivaara. Thank you guys. Your expertise is always valued. So if we don't have any other questions that are bleeding, we will be signing off. So, thank you, everybody. Until next time, good night.
Bye-bye.
Bye, everyone.
And email us. I know we didn't get everybody's questions, but feel free to email us or schedule a call, and we'll be happy to answer those questions for you.
Yeah, please. Email is always the best. We read all of them. Our investors know we're responsive. If you got missed and there wasn't something to finish out here, definitely email or book the Calendly appointments. We don't want anybody to be left behind or without an answer. And there's always some kind of answer, even if it's not one you like. There's an answer that you should have. So let us know. Thanks, guys.